So you have a small trading account. So what? That's not a problem. The problem is thinking you can catch every setup, trade 1,000,000 times a day, and then flip your $10 to $1,000 in 1 week. The problem is you refusing to learn how to grow your small account the right way. Forex trading is not gambling. There's a right way to growing your account. So if you are looking to grow your accounts the right way and you are ready to develop the discipline and consistency it takes to do this, then you are watching the right video. In this video, I'm going to show you how to grow your Forex trading account using the easiest and most repeatable way possible. The first thing you want to discover in the process of growing your account is discovering your trading edge. What is that strategy, that asset, that time of the day that you have discovered works best for you? Identify your edge and mine it till the end of time. Don't stop taking advantage of that edge once you discover it. Now the big question is, how do I identify my edge? This is another big task, another big talk. But no, it is not. The good part about all this is that you don't need to start jumping from one strategy to another or one asset to another to identify what works and what will work best for you. There are professional traders who have gone ahead of you. They've done this trial and error, so you don't have to do them, and they've developed an edge. All you need to do is to study the edge and copy it, then implement it. As simple as it sounds. On this channel, we do not gatekeep. From a mentor, I discovered a strategy that has a 50 to 60% win rate, and I shared it in this video. It is relatable and very easy to execute. I have shared the 3-step box theory approach in this video and the One Candle Scalping Strategy in this video. They are all accessible for you anytime because we don't gatekeep. This is an edge that I have realized that works, and I am mining it till the end of time. So very quickly, I will run through the One Candle Scalping Strategy so you can understand what I have seen and what I am taking advantage of. For this strategy, you need just one asset, one trade per day, one strategy, and you can be profitable. You don't need 5 pairs. You don't need to sit on the chart all day. You don't need to jump from one strategy to another. If you can understand this strategy I'm about to share, then you can develop your own edge. So yes, our asset is Euro USD. Our trading time is 6:30 to 8:30 UTC or GMT, and our trading session is Frankfurt before the start of the London session and after the close of the Asian session. At around 6:30, I start paying attention to what price will do. So every morning I wake up, I make sure my chart is on Euro USD, 5 minutes time frame, UTC time zone. Once I've done that, I draw my Asian range. It is nothing complicated. It is just simply a box connecting the highest and the lowest point during the Asian session. So here's how I do it. This is my highest point. The Asian session runs between midnight to 6 a.m. UTC. So I draw a box connecting the highest and the lowest point. So yeah, this is my lowest point. So I draw a box connecting these two. Very easy. So this is midnight to 6 a.m. So yeah, there you have it. Now once the time is 6:30, I pay attention to what price will do. Now I am only interested when price is trading at the edge of the box, whether it's the top edge or the bottom edge of the box. If price is trading at the middle of the box or inside the box during my trading window, which is 6:30 to 8 a.m. UTC, it means that there is no trade for me for that day. Now in this case, at around 6:20, price breaks the Asian range and I am interested. When price is at the bottom edge, as you can see here, I am expecting that price is about to reverse upward. And when price is at the top edge, I am expecting that price is about to reverse downwards. Now in this example, as price breaks the Asian range, I'm expecting one of two things. Either price breaks the range and continues in the direction of the breakout, or price will reverse, and I am counting on price to reverse for my strategy to work. So any day that price breaks out of the Asian range, it is now a breakout and it is no longer this strategy. But when I notice that price is reversing, like in this case, After price breaks the Asian range, by 6:35, I see that price begins to reverse back and reverses back into the range. And there I have it. The pattern I am looking for. What I'm looking for to happen has happened. So I have my signal. Now, as price breaks the Asian range and starts reversing, I am on the lookout for confirmation. So I'm looking for a bullish engulfing candlestick pattern if price is at the bottom of the Asian range, and a bearish engulfing candlestick pattern if price is at the top of the Asian range. Alternatively, I'm also on the lookout for pin bars, for rejection candles, or just reversal candles, because we don't always get to see engulfing candles form. So I'm just on the lookout for candlestick patterns that tell me that price is about to reverse from the direction of the breakout. In this case, I see a clear bullish engulfing candlestick pattern here. So I see this bullish engulfing candlestick pattern, and that is my confirmation. That's a very clear candlestick pattern. So what I do is that I enter the trade at the close of the engulfing candle. So this is the engulfing candle, and I enter my trade here at the close of my engulfing candle. So now that I've entered the trade, I will set my stop loss 3 pip above the high of my trigger candle. So this is my trigger candle, and I'll set my stop loss 3 pip above it. So my stop loss is going to be somewhere around here. Now for my take profit, there are 2 rules that I'm going to obey. For rule 1, if the distance between my entry and my stop loss is 8 pip or less, then my take profit is 11 pip. And rule 2, if the distance between my stop loss and my entry is more than 8 pip, then my take profit is going to be that distance times 1.375. That is the formula. That is the math. And I do not disobey the math. I follow it till the end. Obeying the math is part of my edge. In this example, the distance between my entry and my stop loss is 8.8 pip. So what this tells me that it is more than 8 pip and it cannot be 11 pip take profit. So to find my take profits, I multiply 8.8 pip times 1.375, and that gives me 12 pip. My take profit is going to be somewhere around here. Yes, my take profit is going to be somewhere around here. You can see how easy and straight to the point this strategy is. This setup is just super easy to follow. This is my edge. This is the edge I learned from a mentor, and I am sharing it with you for free. Now, if you noticed, on this day, my take profits hit by 7:20. Good for me, even before 8 a.m. I take my profits and I go. Now, I want you to notice something. My take profit was roughly 12 pip. The profit I took was 12 pip. It was not 100 pip. So this tells you that it was not just a lucky trade. Just because I understand my edge, I follow my math, I take my profit. And that is how to grow a small account. You don't expect that you will just flip $10 to $1,000 from one trade. You should be open to having consistent growth. That's how to grow your account. Using this strategy, if you average 3 trades per week with a 1% risk, and you have a 50 to 60% win rate with a risk to reward ratio of 1:1.375, over 6 months, you know what that is. Your account has grown. This is how to grow a small account. You don't grow a small account by overtrading, by overexcitement. Oh, you are happy to be in Forex trading. No, you grow a small account by repetition. Identify your edge, repeat it every day. Keep doing the same thing. As long as what you are doing is the right thing, your account will grow over time. And for free, I have just shared my edge with you. If you like this to also be your edge, then you definitely want to see the video on One Candle Stick Strategy. You would find it helpful because that's where I explained this strategy properly. Once you've identified an edge, that's that strategy, that time frame, that asset that works for you, and you stick with it, the next thing you want to definitely keep in place is risk management. Because as a Forex trader, yes, your first priority is not to make money. It's to protect the money you have now. Because if you blow your entire trading account on one trade today, How do you live to trade tomorrow? If today was a loss and you did not use up your capital, it means that tomorrow you can trade and potentially make profits. If you lose 50% of your trading account in 1 week, it means that you are no longer trading, you are now recovering. And most Forex traders who enter this loop never recover. This strategy I shared with you almost all the time gives you a risk to reward ratio of 1:375. This means that for every 1 unit you risk, you aim to make 1.375. The reason why this is good is because with such risk to reward ratio, you don't need to win every trade. With a win rate of 42%, you are already breaking even. So if you just have 50% win rate, you are in profit already. And this strategy has a 50 to 60% win rate. So if you are executing right over time, you will be in profit. But this is only possible if you are able to control your risks. It is a general rule of thumb not to risk more than 1 to 2% of your trading account on one trade. Now, I understand that if you have a very small trading account, say $10, saying don't risk more than 1% is like saying 1% is so small. So I understand this, but you want to try not to risk more than, say, 3% of your trading account per time. At the end of the day, you need to protect that $10 capital, because if you blow it all away, how do you trade tomorrow? There's a way you trade and you don't manage your risks. You realize that you are blowing so much money on Forex trading and you are using your income from another, let's say you have a different means of income, maybe a 9 to 5. You would realize that you're almost gambling. It's as if you are betting. You blow the capital you put aside, then you go to your 9 to 5, take out more money, put it in, blow it out again. That's not what you want to do. You don't want to turn Forex trading into gambling. You want to be very calculative. And the way to do that is to control your risks. Have a risk buffer. How many percentage of my trading capital am I willing to risk on this trade? Always ask yourself that question and never exceed it. Because losses can be painful. If you lose your entire trading account, it can discourage you. It can even stop you from trading completely. So lose only what you know that if I lose it, I'll be alright. Because at the end of the day, losses are normal. But blowing your Forex account is optional. It's left for you to do. And it's very easy. Just risk 100% of your trading capital and you've blown it. Very easy to do. Now, the next thing we should definitely talk about if you are looking to grow your Forex trading account is fundamental analysis. Never ignore your fundamentals. Always open your economic calendar every morning when you wake up. It is important to know if there's going to be a high impact news and how it is going to affect the currency pair or the asset you are trading. Because no matter how perfect your setup looks, a high impact news can invalidate it in seconds. Non-farm payrolls, CPI, interest rate decisions, GDP. This news event impacts the markets aggressively. So you want to pay attention. On this channel, we have a full video explaining fundamental analysis and how to use an economic calendar. We have 2 videos. You want to pay attention to these videos, watch them so you understand how fundamental analysis impacts your trade. For the strategy I shared with you, where we have a trading window of 6:30 to 8 a.m. UTC, if there are high impact news around that time, you need to be aware. You need to know. So you know what to do. You know if you want to sit out and not trade for that day or if you want to trade the news. Now let's talk about psychology, because this is where most traders lose their accounts. So you've been able to identify your edge. You know your trading window. You know the assets you want to trade. You've identified a setup. If you are unable to control your emotions, none of that matters. After a losing streak, you find yourself chasing the market. You want to revenge. You want to make back that money immediately. You are no longer trading if you are doing all of this. You are just, riding on your emotions. And very soon, you are going to feel very bad if you keep going that way. Your emotions can destroy your account faster than a bad analysis. Trust me, I understand that Forex trading can be an emotional roller coaster, but there's something you need to understand. Losses are part of the system. my strategy has a 50 to 60% win rate. So I know that 40% of the time I am going to lose. I expect losses. They are built into the math. One thing that I always keep in mind is that my emotions become easier to control if I follow my rules. I know my trading window, I know my strategy, I know how I want to set my stop loss and take profit, and I stick to it. When I follow my rules, it's easier to manage those emotions because I know that I did not break the rule. I followed the rule. So even if I made a loss, I know it's just a bad day because my rule was obeyed till the end. Now, the next thing we should talk about is journaling. If you intend to grow your trading account, you must track your trades. At what time did I enter the trade? What strategy did I use? How did I place my stop loss, my take profit? I need to keep record of all these things for every day. When you journal your trades and you review your journal at the end of every trading week, you are able to observe your behavior. You now know, do I trade better when I buy or when I sell? Do I trade better when I obey my rules or when I don't? Journaling helps you build self-awareness because if you take 20 trades and you don't journal them, you don't record them, then you've learned nothing. But when you record your trades and you go back to look at them, you are able to learn from your mistakes. You're able to identify, I did not execute this strategy well here and there. And also when you journal, you are able to tell faster when a strategy is a failing strategy. You just see that, it's not working. Over 30 trades, I'm not even getting up to a 10% win rate. You know there's something wrong with the strategy. But if in 30 trades, you are getting a 45% win rate, 50% win rate, you know that, this strategy works most of the time. And no, don't depend on your memory to journal. You can use a small book, you can use Microsoft Excel, you can use Notion. There are so many tools out there that you can use to journal your trades. But don't depend on your mind. Write it down. Finally, you want to learn. Especially if you are just starting out. Don't rush the process. Understand the market. Learn how to choose a good broker. Learn Forex trading terminologies. Learn about technical analysis. Learn about fundamental analysis. And that is what this entire YouTube channel is built for. To help you learn as a beginner. That is also why we have built mytradingland.com. On mytradingland.com, you have access to free videos, free articles, all teaching you about Forex trading. So if you are not using these resources, then you are missing out. And lastly, community. You need a community. Everybody needs a community. Forex trading can be draining sometimes. You notice that, oh my God, losing streak. You lost 4 trades in a row. Sometimes you need somebody to talk to that can understand. And that's where a community comes in. On mytradingland.com, you can be a part of our community. You can interact with us. You can grow with us. You can share your wins, your losses with us. And there are so many traders currently doing that on mytradingland.com. And you want to be a part of it. So if you are seriously looking to grow your account with a community, then don't sleep on mytradingland.com. You would find it helpful. Currently, the 20-day challenge is going on. Traders are sharing their wins and their losses, and people are learning from it. You also need that community. Just visit mytradingland.com. I really hope that you found this video helpful. If you did, don't forget to give it a thumbs up, and of course, subscribe to this channel and let us know in the comment section how helpful you found this video. Thank you for watching. Bye.